Good morning, everyone. Happy Monday at thetradingsyndicate.org. Hey, Jiraj, how you doing? Good morning. Ian, how are you, sir? Hey, Joe. Lonigan, how are you? Whole morning crew is here. What's up, Adir? How you doing? What's up, Kevin? Hey, Juan. Hola, Juan. ¿Qué pasa? Hey, Moran. Well, it's our overnight inventory is long, and if we go and look at the chart, you can see that we found the bid just now in J period. It's around 86 and a quarter. And someone told me that there was a Globex bid from there from Thursday night. So it's interesting. There's probably some orders left in the system. Um, we can tell now, interestingly enough, you see the top of this profile here. I know I'm jumping right into this. I'll show you guys something. It's kind of interesting. Structure is an amazing thing. And most people don't understand market structure. You see, when the market was trading underneath here, people were using that high as their stop. Hey, Dash, what's up? So when the market got above that area, anyone who was shorting up here, when the market broke and came back here, that's where you can expect to see some buying. Now, that is not something that the average trader is going to figure out, right? It's very clear on a market profile chart. And if you ran a half-hour candle chart, you'd probably see the same thing. But when you come back to a previous high of a session, right? Because the market opened here, ran up, and then did this. You could see there was a seller. I was posting that in the room. When we went sideways here long enough, when we took out that high, anyone who was short under that high, who didn't cover, would have averaged up here. And then when the market came back here, they'd have bids here. That's why we had support here. And that's why we're all the way back up here, because there wasn't that much inventory in this area that came out. There was only enough inventory that came down here. And when it saw that big bid, right, you see that big buyer, what do you do as a business person? If you see a whole bunch of people lining up under the level to buy, you raise price, right? Because it's not like a retail store where you have fixed prices for stuff, right? The price moves all the time. So if you see a whole bunch of buyers lining up, pretend that this level is a glass door and you're looking through the glass door and you're long 5,000 contracts. Well, you're selling, you're selling, you're selling, you're selling, you're selling. And when you get to that glass door, you see all these people in the parking lot lining up to get into your store. What do? You raise price. That's commerce. This is not complicated. It's just that most retail traders are not taught to think like a distributor. You guys are taught to chase price. You guys are taught to blow up accounts. You guys are taught to trade with emotions, and everything is psychology and emotions and all this stuff, right? Which is fine. I'm not knocking trading psychology. But I'm telling you, if you don't understand what you're doing, there is no amount of psychology is going to make up for the fact that you have no knowledge, right? You can't expect psychology to solve your problems, right? You have to put in the work and understand how a market works, right? When inventory got long, we got corrected down to those unfilled buy orders, which are who the heck is buying this crazy thing at 2:30 in the morning, right? On a Sunday night? Short sellers. Or a Monday morning? Short sellers. Who else is going to be buying this, right? So short sellers create support, right? When they go to buy back their positions. It's really simple. So we just trade with that business plan. It's the only thing we can do, right? So this makes for horrible trading in the overnight. There was one opportunity to buy that J low. We'll go take a look at it. And other than that, there was a short when I was doing a coaching call earlier in them, and we saw this. So my balance is 76 and 3/4 to 84 and a quarter. And thanks to Renee for giving me that because I was half asleep this morning, so she gave the proper balance zone. Uh, there's so we have we had a seller here at 68.92. Do you guys see? Seller, right? Seller, 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 seller. So if you were shorting this area, your stop would be here, and when it broke down here, you'd cover VWAP. So that was the short. The long would have been buy J low, put your stop underneath it, and take it back up to 91. So those are the two trades that were there, right? Hey Dave, how you doing, brother? Depends on the time frame of the short, Michael. That's where the largest short position came in. That's where the big buyers came in, right? So there are people who are short here. There are people who are short here. There are different time frames. As a market trades in time, there are going to be people who are shorting it at different times. Those are the different time frames, right? And the more people who shorted it when we got down here instead of covered, so how this works is when the market came down, the first people to buy are the smart money shorts who are covering. Then wholesale, you can see they build on top. Then this big green candle is caused by the idiots who short down here and realize they're screwed. They all go to buy back at the same time and there's no supply and the market price jumps. Right? You might have to rewind this a couple of times and replay what I say. So the first people to come in and buy are the smart money shorts who've been shorting here. Right? Then wholesale will come in and build a position based on those people because they see that they're buyers, right? We will come in here as well. But this big green candle is caused by the idiots who short the low and go to buy it back, and then there's no supply. Price gets yanked back up. It's very, very simple. Okay. Alrighty. So we're in distribution. The overnight POC was down here. It was around 81.5 when I started looking this morning. It has now moved up. Hey Jerry, how you doing? Yeah, the problem is it'd be nice to get out at the J low, Michael, trader one, but if you have to cover a bunch of size and 150 other people are trying to cover at the same time, there might not be enough supply. That's what people don't understand, that there's not an unlimited amount of supply in these markets. It's a very strange concept, but there's not there's a limited amount of supply in these speculative markets. And that's how the markets have been created. That's how they're structured. And that's what we have to deal with so far. It's not like small caps where you have a lot of dilution. There is no dilution. Yeah, that's exactly why. Exactly. Now you're cooking with gas, Michael. There you go, right? Yeah. So that's why you'll see this grouping of volume and time here, right? That's distribution, right? The volume and time from the end of the day Friday is here, and we are selling it up here for profit, right? And we found where the buyers are desperate, so we come down here and then we yank price up. Do you think at this stage it would be healthy to build some short positions for a 4-hour time frame? Good question. Let's go take a look. Where's my 4-hour candle wax chart? Let's go look. Now, if you were building a short position, BH, how are you going to do that? Well, say, where's your out, right? So say you were building a short position here. Do you see how the candles, every low is higher on the 4-hour? That would make me nervous as a short seller, okay? So you've got basically trend up that you want to short into. Now, if you have, like, say you're trading with a lot of dough, right? If you're trading, like, say you're trading, maybe you're trading with, I don't know you, so you might be trading with a $10 million account, and you're going to go, okay, I'm going to put 50 grand towards this short, right? So I'm going to allocate this amount of capital. How would you do that? Well, here, sorry, you can see the top of these candles here. That's where your sort of your backup's going to be. So how you would build a short now, I would rather wait until it goes above 69.02 and comes back in. And I'd short this part because then you've identified that there's a seller. If you're trying to short the front end of the move, here's what you require, right? Like just if you were making banana bread, you'd need certain things. So if you're going to short the front side of a move on a 4-hour candle, the first thing you're going to need is cash, okay? And a lot of it. The second thing you're going to need is skill, okay? So the skill to know where your risk is, because your risk on a move like this, going into the end of the year, it could work because you do have a Fed coming, right? So if the Fed comes out and something's a little funky and you want to build that short position, where are your outs going to be, right? I don't mind you taking a trade. I don't think that there's a problem. The problem is, where is your stop? So, for example, you know that there is a seller here, right? There's a seller at 69.05 half, okay? They were there before, they'll be there again. Trust me. I know, takes one to know one. How do I know that? Well, because that was me, right? If I sold there again, I mean before, I'll sell there again, right? So at that level, you know that if you are short and it takes out 69.09 half, you're in trouble, right? The next place, and I wouldn't really count on it, is up here, just a little bit above, but I'd say really this is where your protection is, up here at 32 3/4. Now, that's a really risky short, right? So how would I manage this so you don't spend too much money on it? Well, say you were shorting here, I'd use 2 3/4 as my out, right? I'd be using this 2 3/4 as my out. And if you really wanted to spend a lot of money on a stop, it'd be 9.5, right? And then you'd want to put bids down here so when the market does correct, that you get filled, right? So it's possible. Now I'm cheap. So what I like to do is I like to short the back end of the move. When the seller has shown themselves and they start pushing price down, then I can short. We always get sucked in, and social media and people, they always try and get us sucked into the front end of the move. We want to short the back end of the move when the seller has come out of the bushes. Because on the front end of the move, it's hard to see the seller, right? Because they're allowing price to go up because people are coming in, so they're going to try and milk them for as much as they can, right? So here, I'll show you on the 1 minute candle, it's happening right now. See, this is the front end of the move, and this is the back end of the move. So if we were shorting, there's the front end, there's the back end. So we'd be short using 92 as our stop, right? And then put bids down here to see if you could get filled. When do you reshort a level that has been rejected before? Usually once it gets, now, in a perfect world, Mohammed, I like for it to do this and then short here. Then I got a place to put my stop, right? Because I know that there was a seller here for hours, right, at 92, and they're back, see? So if I was shorting it now, I'd be short here, and I'd put my stop above 92. Now, if I was a big spender, I'd have my stop at 94. Okay. I like shorting the back end of a move because then the sellers show that they're desperate. Because we want desperate sellers to push price lower. Why are they desperate? Because they're competing with each other. See, everybody tries to make it that the longs and the shorts fight each other. They don't. They're just doing business. The sellers are always fighting each other to capture the buying. That is one of the most important things in wholesale size trading is if you have 1 million shares for sale, most likely you're not the only one who's a size seller in a market unless you control all the supply. But that's a story for another day. So if you are in a market and you're a size trader and say BH gives me an order and he says, JJ, I want you to sell 1 million shares of this stock over a week, try and get me out of 200,000 shares a day, right? And I get in there and I start selling and Raj starts seeing, oh, there's a seller, right? And he's got a client who's got a position and Jerry's got a position and Juraj has got a position and Moran has a position and they all start selling. Then I'm in trouble, right? Because we're all competing for the same buyers, right? And that's when price goes down. That's when you have to sell in a quiet, stealthy manner, which is also another story for another day. But you see how there's a seller at 92? So if you were short 91, stop 92, 93, you're okay, right? Now, the only problem with this kooky market is you have to wait forever for the short to work because there's so many idiots stuck short underneath who are providing the buyer. So it's literally like watching like maple syrup run down a tree in the middle of winter in Quebec. It's slow. It's like drip, 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 drip. I like it when it just goes like that, when you get some smooth follow through. But it's moving. Look, so if we're short 91 and our stop is above 92, right? You put some buy orders. Now here, do you see this little grouping of candles? That's where these knuckleheads are all bid, I bet. So I'd put a bid right above that at 89, right? So say I'm short 5 contracts at 91. I'm going to buy one back here at 90 to see if there's a seller, and then I'd put a bid here just under 89 or 89 to see if that gets hit. And then I'd stagger my buy orders down here, and if my buy orders don't get hit, then I know, hey, they're not selling it down there, right? So if I know they're not selling it, then I know I'm going to have to cover. And that's how you get out of trouble, right? So you're not holding a trade and have it go against you, right? You use your buy orders, right? You got to use your buy orders to tell you whether or not that short is working. That's how old traders used to trade, right? You'd put a trade out and then you'd put orders in to see if those orders get filled. If those orders don't get filled, you've got to adjust your pricing. See, that's exactly what's happening now, right? It's not getting down under 90, right? This market is a pain in the butt to short. It seriously is. Shorting this market is seriously a pain. It's not fun. It's you know RTH is much better because you get more order flow on the short side. But man alive, sometimes was it Friday? Cisco was in a short. I think he was in a short for like 4 hours or 5 hours. He was just sitting there and waiting and waiting and waiting. The seller was there, but he had to wait like 4 or 5 hours. And he was like, he had to stay up till like 4 in the morning Hawaii time, right? To cover his short. He was like, okay, I'm gonna sleep now. Yeah, he was short for hours. Uh, Now me, I don't like to be in a trade for more than 5 minutes, but that's just me, right? So I like to get in, get out, and then run. Now let's see when London opens, do we get any relief? Can we get any selling? Right? Longer term, now these knuckleheads are supposed to lower rates, aren't they? Um, on Wednesday, everyone's expecting a rate cut. So I have no idea how the market's going to respond. Everybody says, oh, it's priced in and all that stuff, right? But I never trade around a rate cut. I'll let everybody else go and beat each other up, and then afterwards, once it calms down a little bit, then we can go in and, you know, pick up some. It's like, it's like those old westerns where the two guys beat each other up, and then the thieves go and pick up their wallets after one gets knocked out. That's what we have to do as retail traders, right? It's not glamorous, but we're kind of like, we are the raccoons of the forest, right? We're scavengers. We are not the apex predator in the market, right? We are the scavenger, right? We are the buzzards flying above, flying lazy circles, waiting till some institutional guy drops some food, right? Oh. Hey, folks who are joining us on YouTube, good morning. Oh, yeah, so it's a bit of a slow one. I won't keep you guys out. Um, Make sure you come and join us at the Trading Syndicate. Steve's running a special right now, so you get access to our room and our AI trading coach, which really is pretty next level, man. I'm just blown away by the amount of technology this AI is, and it's from trusted sources, so we're uh, we're having good results with it. It helps people keep their cool and understand what's going on. Excuse me. Okay. It's like watching paint dry. Oh, we got a minute till London opens. Oh, we got a stock question. Let's say a stock has a market cap of 30 million and an average daily volume of 80 million. What should be the takeaway? Well, uh, wait a minute. So the market cap and trading volume are two different things. So is it trading $80 million worth of stock every day? Or is it trading 80 million shares? So if the market cap's 30 million and it's trading 3 or 4 times the market cap, that means there's quite a lot of quite a lot of participation. It's trading 80 million shares. Okay, well that's completely different. That those two things are completely unrelated. The market cap and the trading volume are totally unrelated things. There's no takeaway. So if it's trading 80 million shares a day, what does the chart look like? Is the chart going up? Is the chart going down? Is the chart sideways? Right? And what is your intention? Right? It's going up? Okay. So they're taking the price higher to distribute stock, right? There'll be insiders who own that stock at a nice cheap price who will be distributing it. Okay, London's going to come down here. So what we're looking now is, can we see if London comes down and takes out that 86, that J low? Yeah. So market cap and trading volume are completely unrelated, like for our purposes. Well, if it goes up and then goes sideways, it's distribution. If it goes down and then goes sideways, it's accumulation. So you pretend, say the stock is here, and then it goes up here, and then it goes sideways, right? Well, that's the cost basis, and this is the distribution cost basis, just like a store. Pretend this is the warehouse, this is the highway, this is the store. You load the trucks in the warehouse, you take them to the store, and then you sell them. Pretty simple. That's it. Yeah, couldn't get it back above 92. That seller is still there, Jiraj. That 68.92 seller is still there. Okay, so if say you shorted 91 again, right? Now you're looking for 89. I'd put bids at 88 and 3/4. There's one. Right? See how it hit 3/4 and bounced? You probably didn't get a fill. Your questions, P, aren't really like, they're not really like, I don't understand what you're trying to get. If the dollar volume, well, the dollar volume has nothing to do with you. Dollar volume has to do with guys like me who are selling stock into that dollar volume. So what do you want to do, Pete? Do you want to short the stock? Do you want to go long? What are you thinking of doing? See, the scenario or the takeaway that you're looking for, given the information you're giving me, there's no takeaway. Like there's no answer to your question. If you show me a chart and say I want to short this stock or if I want to go long, then we can put together a business plan for you to execute the transaction. Get it? So you want to go long? Do you want to go short? Do you want to analyze the stock to see when a good entry point is? Right? That's what you want to be doing. Don't worry about the dollar volume and all that stuff because it has nothing to do with you. I mean, unless you have like 10 million shares of that stock and you're trying to sell it, then DM me, I can help. But if you're just a retail trader and you're trying to figure out what to do with it, your takeaway should be built on the chart. You guys should be, and this is a good questions he's asking because it shows how people get wrapped up in all this stuff that really doesn't affect them. You want to be watching the chart, right? You want to be, the chart is telling you everything. The takeaway is the chart. The chart is showing you the distribution and sales and markup of that particular stock. So then you can base a business plan and build a transaction around something that you see. So if a stock is distributing and you see, for example, here we know that there's a seller at 68.92, right? That's meaningless for you. You're looking at the wrong thing. So you want to short a stock that's 87% institutionally owned. Is the chart going up or is it going sideways? Pay attention to the chart. Don't worry. You know that the supply is limited, right? And you want to short a stock where their supply is limited. It's going sideways. Okay. So you put on a short and you put your stop at the top of the sideways range. Right? So if it's going, like pretend this is the stock, right? It's gone up, right? Pretend these are daily candles, right? And the stock went up, right? And it's going sideways. So you short it here and you put your stop here. That's all you really can do. And then you must have some sort of thesis of where you want to cover. If the stock's getting really active, right? You'll also want to look at the trades. Is that dollar volume, is that all retail trades coming in? Is there, maybe it's traded 100,000 transactions, right? I'd be very careful shorting stocks going into year end, especially if they're 87% institutionally owned, because there's only 3% of the stock that's in the float that's available. You know, I I really think shorting stocks is a fool's game. It's the one of the hardest ways to make money because you're trading against the flow of business. And people, it's very, people love to short because it's glamorous. And they made that stupid movie with the screaming Batman guy, right? But I don't know. I think, hit and run shorts are great, but if you look on my YouTube, I've done an extensive piece on why markets go higher, how stocks are structured, how to look at the chart. I don't know. Yeah, that movie is a really stupid movie because it 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 got a whole bunch of retail traders thinking that they could short markets and call tops. But what they don't understand is retail traders aren't trading with hundreds of millions of dollars. And they're trying to, it's like me watching a Formula One movie and going and trying to drive a Formula One when I don't know how to drive a go-kart. All right. So you got retail traders out there on their push bicycles and they're getting clipped. They have no idea how to short. They have no idea, right? They're just, the stupidity of it is ridiculous, right? It's absolutely stupid. Shorting stocks is one of the dumbest things. It's like it's such a pain and there's so much work going into it when you have a market that's completely built rigged. In 2005, they changed the short selling rules to make it harder for short sellers. You guys don't even know that in 2005 they changed the short selling rules. So you guys are going out there and doing business in an environment you have no clue what you're doing. They changed the rules to stop naked short selling, making it harder. Then brokerage firms are dinging you for borrow fees and all of this stuff, and people are gladly paying it. They're getting caught in shorts, and the stock rips on them. They're always trying to short the front end of the move too, right? As it's going higher, they don't wait for it to start selling off, right? Because they all want to be first because they've got this. Oh yeah, well Michael Burry was in a short for 2 years. Yeah, it's because he walled off his fund, and if that trade hadn't worked out, his ass would have been in jail, right? Because his investors were going to sue him because he wouldn't let them redeem their money. So, unless you have a prime brokerage account with Goldman Sachs, long-term short selling is a fool's game, man. It's a fool's game. It would help if you gave me the name of the stock or showed me a chart. You're just kind of going around and around in circles, but you're not really asking me any questions that are actually going to help you. You're focusing on the wrong thing, P. Go look at the chart. See, you're not an institutional trader trying to borrow 1 million shares to short, so don't worry about all that stuff. Go look at the chart and stay in your lane. It'll help, right? Don't get caught up in all those things. They're not going to help you. The chart's going to tell you when you should short the stock or when maybe you should go find another banana to peel. You know what I mean? The other thing is people go and they find a stock and they get obsessed with it, right? They get obsessed with it, and that leads to really bad business decisions, right? Don't get obsessed with this crap, right? That obsession will cloud your judgment, right? Unless you have a cousin that works at the company that knows that there's accounting fraud, and then you and I never had this conversation. Don't get obsessed with this crap. Find stocks to trade or trade a market where you can watch the chart and make good business decisions. Don't go down all these rabbit holes, right? You guys, you're gonna waste so much of your life. I know people who analyze stocks and they look at the float and they look at this and then they go and trade it and they get wiped out or they get stuck in a trading halt. Here's the thing. Come into our trading room. Here's the other thing I'll ask you, P. Are you doing this for drama or are you actually trying to make money? Because if you're actually trying to make money, there's a lot easier ways to make money. Come into our trading room, I'll show you. Right? There are a lot easier ways to make money than doing what you're trying to do. Right? Let me put it to this way. If I could show you in 5 simple steps how you could trade and make some money every day and earn a living, is that something that you're interested in? Right? Maybe, maybe not. Right? I would rather make a little bit of money every day instead of go down these flights of fancy. Social media is full of this stuff where they get people to waste so much of their time and so much of their life just chasing like these crazy ideas. If you do want to make money, clear out your brain, join the trading syndicate, come and I'll teach you how to trade. Quit screwing around looking at all this stuff. You're not going to make any money shorting that stock. You're looking at all the wrong things, right? We charge 19 bucks a month. I mean, for God's sakes, you know, it's less than a cup of coffee every day. That's like a week of coffee, right? Try it for a month, right? Try it for a month, and all you really need is the ability to pay attention, not get distracted, and do what you're told. That's how you make money trading. You focus and you do what you're told, right? And you wait for a good business scenario, you execute, you take the money, and you run away, right? You don't stand around and jump back into markets. Take your money and get out. So if we were short 90, 91 against that 92 seller, right, we'd be covering here. It would take forever, right? It took 15 minutes, right? If you want to earn money, come with me. If you want to screw around looking at float analysis and all that stuff, that's beautiful, but you're not going to make a dime, right? So here, if we were short 90, right, or 91 against 92, right, you could be covering here at 87, make 2-3 points, right? If you trade candlestick price action and you're struggling, come into my room. I'll teach you how to trade candles. Look, it's really simple. If I just take this candle chart and put it up here, you don't need anything else, right? Look, it's just insanely simple, okay? You know that there's a seller here. You short here, you put your stop here, you put your buy orders here. So if you were short, say 90 and a half, and you covered at 87 and 3/4, you make 2 points, right? 2 points on one E-mini is $100, right? You do it on 3 contracts, that's a $300 trade. You do that trade once a day, that's $6,000. How many of you are making $6,000 a month in income? How do you know that there's a seller? It's right here. Look, there's a seller. What do you think that is? Right? I'll teach you the business. Right? So if you did that trade and you made $300, how many of you have made $300 tonight? None of you. Right? Maybe 1%. How many of you, I'll teach you how to make 20 to 50 bucks a day using the micro so you get consistent and you learn the craft. Right? Teach yourself how to get paid. Retail traders, they don't do well because they're conditioned and taught to lose money. You guys go and look at all this crazy, weird crap, right? You don't make any money. You blow up accounts, right? Because you're conditioned to lose. I'll condition you to win. Even if it's a small amount, you get used to being paid. See, look, if you had been short 90 and you covered 87, that's 3 points. That's 150 bucks on one E-mini contract. On 3 contracts, it's $450. How many of you made $450 tonight? Get real. If you want to get real about your trading with all this BS gibberish that people talk about, you don't need special charts, you don't need footprint or nose print or book fart or none of that crap. All you need is a 1-minute chart, the ability to pay attention and do what you're told. If you can follow directions and if you can pay attention, you will make money with me. That's all you need. Right? That's all you need. All you need to do is do what you're told and pay attention. That's it. Right? You see how there's a seller here at the top of this candle? There they are again. That's how you tell where the sellers are. The top of the candle is where the seller initiates. Why? Because there's competition. So when the market gets back up there again, in mechanical markets like we have, there will likely be sellers there again, right? Trading is simple. It's not easy. It takes rep- repetitive, disciplined. It needs an approach where you just do the repetition over and over and over. So when you trade, you are doing it like breathing, right? So when you put in your sell order, you put in your stop, right? You put in your sell. As soon as that sell order gets executed, you put your buy orders in. If the buy orders don't get executed, you cover your short. If the buy orders get executed, you can stay short. How much more simple do you need? There's no, you know, waves or fibs or anything. You find out where the buyers are. You sell down to where the buyers are. Now, if you want to go long, this is not the greatest place to go long, but you know what you'd do is you'd be buying the 88, 89, you'd put your stop under 87, and then you know that there's going to be sellers up here, you sell into it. But if you know that there's a seller at 92, you're always going to be shorting that level. When it breaks VWAP, it'll come back down to this 81 level, right? And this is just a 1 minute chart. That's all it is. It's just a 1 minute chart. It's all you need. The other thing is the chart will tell you when to trade and when not to. For example, if you're a scalper, right? If you're a scalper and you see this, leave that alone. That's not for you, right? You need this kind of a movement if you're a scalper, not this, right? That's not scalpable, right? That's where you have to build a position. That versus this is when it's slow. This is when there's more business. There's more people in the market. The chart's trying to tell you what's going on in the place of business. It's telling you how business is going. Here, business is slow. It gets a little busier, right, as the London markets open, but now it's slowing down again. So that way you don't trade this chop looking for a scalp. You go long, you go short, you go long. Yeah, just leave it alone. Wait till it gets a bit busier. See? You know, if you want to make your life simple, if you want to pay your bills, right, this is not the Lamborghini room, right? I mean, I do have one-on-one coaching, and I coach people who are like just starting, and I also coach people who are in the business, who, like right now I'm coaching somebody who wants to start his own hedge fund. You know, he's in the business and eventually, you know, he's a young cat and he's going to start his own hedge fund. So I'm coaching him. But there are other people who just want to make a living. And that's what we should all strive for. Because if you can make $500 a day, that's 10 grand a month. And I guarantee you that less than 1% of retail traders are making 10 grand a month. I guarantee you. Because they're trying to all trade some fancy ass chart or some stupid indicator, or they're listening to somebody who's never worked in the business trying to tell them to short the front end of the move and all gaps fill, and just stupidity, right? There is so much and then people, because you can't call people stupid anymore, so they make excuses and, oh, everybody has a right to their opinion. Well, not in business. If you're blowing up accounts, you don't have the right to your opinion, right? It's brutal, right? You know, just do what you're told, pay attention, you'll make money, right? Do you want to make money, or do you want to just like keep spinning your wheels? Hey, some people love drama, right? Some people love losing money. It's a thing, right? If you want to make money, come to the tradingsyndicate.org. We'll teach you how to make money. We'll teach you to stop blowing up accounts. We'll teach you how to run a proper business, right? Make your life a little simple, right? Do some trades and then get out, right? You don't want to be sitting in front of the screen for 16 hours a day, right? Go have some fun with your family. Go and, you know, just keep things simple, knowing when to trade, when not to trade, right? You wait for a business setup that has been tried and tested, like the look below and fail. When it presents itself, you execute ruthlessly. Take your money, shut off your computer, go to the beach, right? Go have a coffee, go do something fun, right? So I period could not take the low of J, bids again, right? Look. Last time the bid was here. Okay? Now the bid is up here. Simple. That's all you have to do. And just practice over and over and over and over again. Watch markets. If you can watch a market without trading it, you're going to be so much further ahead. Because you will understand the little subtleties that everybody else misses. Because they're focused on all the wrong things. Right? And that's it. And that's it for this morning, folks. It's pretty slow. Chill out. Take it easy. A lot of my big traders have wound it down right now. They might scalp a little bit, but we are into the last couple of weeks of the month, the year, right? We have, yeah. So we have 3 more weeks left in this year, basically, and trade smart. Wonderful, wonderful. Thanks, everyone. I'll let you guys go. Come and visit us at tradingsyndicate.org if you want to make a living. And we will see you at 9 o'clock Eastern Time for our next session. Be careful out there. Make good decisions. And don't take candy from strange market makers. Thanks, everyone. Appreciate you guys. We'll see you in a few hours. Bye.